3, 2, 1, and we're live.
Hey everyone, thank you for joining today. This is Juan Deshon at Quest Trust Company. Today we have a great class for you. If this is your first time attending, this is probably the best class to join Quest on. We're going to be going over our STIRA basics, where I'll walk you through all the kinds of accounts, all the things you can do with them, and some case studies as well. I see a few people are joining right now, so we're going to let a little bit more people join on before we get right into the meat of things. At the time being, I'm going to go ahead and share my screen. And just so y'all know, while I'm going through the presentation, I also have an IRA specialist on the call as well on our chat box. Her name is Nicole Baco. You can see her camera right there. If you guys have any questions throughout the presentation, it's a little difficult for me to see the chat box at the same time. So she'll be helping with answering any questions that you guys may have. Also, just reiterating some of the things that I'll be kind of saying throughout the presentation, she'll be writing it down for you guys. So that'll be real simple and real easy to go. I'm going to go ahead and go over some of the things Quest has for you guys that you should be well aware of. So again, as our one-on-one class, I kind of want to go over a little about who is Quest. So Quest is the largest self-directed IRA custodian in Texas, right? We administrate self-directed IRAs. We provide education on all kinds of platforms, YouTube, Facebook, this Zoom link right now, and we're constantly hosting weekly webinars. And I'm going to go over those weekly webinars as well, so you guys have sort of an idea of what we kind of provide for you guys to view. Just so you're aware, if you ever need the recording of any of our webinars that you miss, you can go back on Facebook and view those recordings. So be sure to check us out on Facebook, Quest Trust Company, and go ahead there. So again, these are a bunch of classes, for example, that we have for you on our website to just view at any point in time. They're going to be specifically IRA related. So for example, we have Roth conversions. We're going to go over Roth conversions for about 45 minutes. We have, private lending. We're going to go over how to private lend in an IRA account, maximizing self-employment, going over self-employment plans. So a bunch of different classes that we have that are basically just going to go over IRA accounts, what you can and cannot do, and kind of really dive into the specifics of them because there's so many topics. Here in our one-on-one class, I'm going to tease a little bit of those topics and talk about them a little bit, but we won't go into too much detail because we have extra classes for them. On top of that, webinars every single week. So right now we have our weekly webinars. We have self-directed IRA Saturdays, which are a huge hit. So every single Saturday, we'll bring on guest speakers, talk on different topics, not just IRA accounts, but real estate investing in general, multifamily. So if you guys are interested, definitely sign up for those. All of these are free to you. $1 trillion investment mixers. So these are, again, more of a mixer type setting. We used to do these in person where we kind of go ahead and mingle and then have a guest speaker. Right now, still online. Hopefully soon we'll have them back in person. And then our $1 trillion happy hour. This is a fantastic event for individuals who are actually looking to engage with people as opposed to listen to one speaker. Here you can actually give a whole minute kind of elevator pitch about what you have going on, what you're looking for, maybe deals that you have that you're looking for funding for. So if you're someone looking for money, this is a great place to go. If you're someone with money looking for deals, an excellent place to go as well. It's about an hour or so webinar. It goes about 2 hours, 6:30 p.m. happens twice every single month on the first and third Wednesday, right? So definitely sign up for those. I think this is one of the greatest things we do. It's for anyone, not just Quest clients. So you definitely get a lot of people out there in our markets, and again, also nationally since we're online. Now we also have a big event tomorrow, QuestCon Live. If you have not heard of QuestCon Live yet, it's not too late. What we're doing basically is we used to do a big expo. This used to be in person. We used to have it for 2.5 days at a grand hotel. And obviously we had to kind of transition a little bit to online, right? Because of COVID and everything that happened in the past year. So what we could created is QuestCon Live. We still give that essentially feel that you're at a big exposition with countless speakers. I mean, I'm talking 25 plus speakers on different topics that are there to help you in their expertise and to give you more education on those topics, right? We're not trying to sell, but we're trying to educate. And this edition is specifically on private lending. So we have a bunch of private lenders out there, gurus in the space, people who've been doing it for many years that can assist you and kind of tell you kind of tips and tricks for you to engage with on a 2-day event online for you to watch at the comfort of your home, right? So that's a very ideal event if you are getting started, if you want more information, if you want to kind of just see what other people are doing and also mingle with individuals joining, right? This is an event that has over 200, 300 people on the event at any given moment. So it's a lot a good opportunity to also mingle and speak with people and network as well, right? So take a look at the QuestCon Live. I believe Nicole will put the link for this event there. Take a look at our schedule so you can see what speakers we have, what topics we have going on, what panels we have going on. Again, the event is tomorrow, right? So this is a paid event. Tickets are on sale still. You can still get in on time. So definitely check that out, QuestCon Live, with the link that Nicole should be providing right now. That kind of sums it up a little bit on our events and what we have going on at the moment, but we definitely want to make sure you keep checking it out on our website and all that. I want to kind of change gears a little bit and kind of show you guys kind of why I'm here at Quest and what I've gotten out of it. So my role here as an IRA specialist is to, on a day-to-day basis, speak to clients or speak to people who are interested in self-directed IRA type topics. Right, I get questions that come from all kinds of sides of the field, left field, right field, wherever, right? And so my goal is to assist you and help you in the education side so you can make the best decision possible. I don't have a stake in your investment. I don't have a stake on whether or not you open an account with me. My goal is really to just help you with my knowledge and expertise on this niche product. There's CPAs, there's financial advisors out there, there's attorneys that can assist you as well, but they don't necessarily specialize in IRA accounts, whereas that's what I focus on. I'm just a free tool in your tool belt that you can use to assist you there. These are just a few pictures of people on my staff and as well as my co-workers that have helped people throughout the years. We always do events. We travel nationally for events. We're always having fun with individuals. We always have a booth and our little piggy, right? If you ever see us at a public event, you'll see us with the little pigs and we hand them out, right? So always say hi to us. We're always, friendly staff out here. We're trying to help you out and everything. That's kind of why I work here. I like to help wow. So keep that in mind. Essentially, Quest is really kind of trying to help you and educate you in this topic because not a lot of people know about it, but a lot of people can take advantage of it, right? But as I mentioned, I'm not the financial advisor, right? Right. So I'll get into that and why I say that in a second. But let's get that right there. Reason why is because I can't give you advice, right? I can't give you tax, legal, or investment advice. You have to do your due diligence on these investments yourself, right? I'm here to talk to you about what you can and cannot do in an IRA account, how the IRA functions, but I can't advise you on which route to go. So you still want to have your CPAs, you still want to have your accountants, you still want to have your attorneys on staff and there to help you when navigating through these investment opportunities. This is money you worked with or for your retirement. You don't want to necessarily lose it by doing a bad deal. So definitely always do your due diligence. Everything I'm about to show you in this presentation is for education purposes only, right? Everything is really just case studies of things I've done personally, things we've seen here. But again, for education purposes, every phone call we have, we're here to answer your questions. So we'll help you any way we can, but just want to make sure that disclaimer is out there as well. So changing gears and getting to the meat of the topic, obviously to talk about IRA accounts, I have to talk about what is a self-directed IRA. I get that question all the time and very common because a lot of people don't really know the difference and may actually think it's a whole lot different than what you may be used to already, right? So really the first thing I want to debunk here is the myth that a self-directed IRA is any different than an IRA that you may be familiar with already. Self-directed IRA or self-directed is a marketing term. That marketing term we use so that you can differentiate between an IRA that you may have invested into private assets versus an IRA that you may have that's invested into a public market. Right. So when you're investing in stocks, bonds, and mutual funds, you're still using an IRA account. You understand how the taxes work, right? You understand that the profit is not for you right now, but for you later. But your investments are in the publicly traded market. So we all understand that. A self-directed IRA is exactly the same, but what we're changing is the investment. Instead of public stock, it may be a note, it may be a real estate asset, it may be into a private company, right? But again, there's no technical difference between a self-directed IRA and an IRA. And then we'll also mention different accounts here. I'm going to go over about 7 different types of accounts. And when I mention all of them, I'm going to say IRA, I'm going to say Roth, I'm going to say simple, but all of them at Quest are self-directed. The custodian is what allows you to make these kind of different investments. Whereas that same IRA at Charles Schwab, Merrill Lynch, Fidelity would allow you to invest into the stock market. Right. So those are the differences. It's just the asset types and the custodian that holds them. Now, why would I want to have a self-directed IRA? What are the benefits to it? Well, the first one primarily is going to be diversification. So when I first started here, right, I was also only aware that you can invest your IRA into the stock market. I was aware that, people had 401ks, people had pension plans, people had TSPs, whatever it may be, and they were investing it into the market in mutual funds, letting it rise throughout the years. And as you're putting money in and as the market's rising, you're making profit there, right? And that was diversification. If someone really wanted to get diversified, they would take a little bit more control and invest it into specific different kinds of stocks as they go up and down. However, true diversification, to me at least, is when you have eggs in maybe the public market basket as well as the private basket, right? When you're investing into real estate notes. So to give you a personal example and show you some proof of that, essentially, I may have a Roth IRA at Fidelity, which I keep in the mutual funds. When I have funds in there, I don't have necessarily a private deal. But once I do, I move money over from one place to another to diversify my portfolio and invest into real estate. So for example, when the market was doing pretty bad sometime last year, my money was diversified and my money was in real estate, and real estate was doing good. So I wasn't necessarily worried. And that's the benefit of diversification there, right? And we'll get into kind of the details I kind of teased and alluded to, moving money back and forth. I'll explain that. The other thing is tax savings. So tax savings, of course, using an IRA account, you can have pre-tax money that's growing tax deferred. You can have after-tax money in there that's growing tax-free. The ideal scenario is at the end of the day, you're going to be paying less taxes than you are now when you take money out, whether it be tax-free or just less in general. Social investing is an interesting one. Essentially, when you're investing into real estate or investing into private assets, you're putting money in the pockets of those around you, those in your community, right? If you're investing into real estate or you're investing into a real estate investor and providing funds, well, then you're also allowing that person to go on, make the project, rehab a home, put the white picket fence up, put the family in the home and 3 Labradors, and make someone happen. You can go by and drive by the house and touch, feel, and see that property, right? So that's kind of a social investing. You're actually making an impact with your funds as you invest. And the last one is invest in what you know best. For the people joining onto this call, for the most part, if you have some familiarity with Quest or if you've been told about it, it's probably stemmed from a conversation somewhere along the lines that I want to invest into real estate, but my capital is tied up in an IRA account. So that tells me a little bit that you know a little bit or a lot of it about real estate or something about along those lines. If you apply that same knowledge that you have to your IRA investing, as opposed to letting the IRA do what we've all been traditionally taught and go in the market, you may be able to guarantee yourself a better return. I'm not saying it's guaranteed. I'm saying that you may take control and invest into assets that you understand. And that way your return will be in your hands. And ideally, that'd be a positive return, right? So those are benefits of these self-directed IRAs. Those are things you want to consider whenever looking at an IRA and why you would want one, right? You can have multiple. This is just one of the ways that you can go. So as I take a transition into the types of plans, remember I told you I'm going to go over 7 different types. These are 7 same accounts that Quest administrates and can hold for you. And I grouped them up into 3 different categories. The first one being personal plans. Now, this one being the most common plan that you see. A traditional IRA, probably the most common, is the one that you may have because pre-tax dollars that is growing tax deferred. Why is it so common? Well, most individuals that have retirement money, it's coming from an old employer plan. When I say employer plan, I mean those 401ks, 403bs, TSPs, those abbreviation terms. Those are employer plans where you worked a job, they put some money in it, they matched, you put some money in, and now you've left that job and you're stuck with this bucket of money. You have 2 options. You either leave it there, move it to an IRA. Sorry, I guess your third option is actually take it out and pay taxes and penalty, which some people do, right? But if you were to move it to an IRA account because you want to take a little bit of control of those funds, then you would move it to a traditional IRA. By doing so, you're taking one pre-tax bucket of money and moving it to a second pre-tax bucket of money. So to you, it's not taxable, right? No penalty. It's just moving over basically from one account to another. And then now you can invest through that traditional IRA, continuing to defer taxes. The Roth IRA is a very sought out account and probably the second most common, but it comes with a little bit of a caveat there. What happens is a Roth IRA is an after-tax dollar account. I put money in that I've already paid taxes on into this Roth IRA account, money that may be sitting in my checking account, maybe sitting in my savings account. I can put that into my Roth IRA. when I grow that money, instead of deferring my taxes and on the growth, it grows tax-free as long as the deal with the IRS, the deal with the devil is as long as I keep it in there for at least until I'm age of 59 and a half, and I've had that Roth for 5 years at least, then I can take the money out tax-free. So I got to meet both those requirements and qualifications for it to be completely tax-free, which in general, these accounts are for the long term, right? These are things not for my cash flow now, but for me in the future for retirement. So that's kind of in the plan already. So as long as I keep my money in my Roth IRA until I'm 59 and a half, then I can reap the benefits and I'll be thanking myself later. Now with these traditional IRAs and Roth IRAs, there's a certain amount that you can put in every single year that is capped. But I want to be clear that it's only a cap on the amount that you personally contribute, right? Money that's coming from other IRA accounts, other 401ks, other employer plans, other qualified plans, there is no cap. But money I put in personally, that's where the cap lies. So for a traditional and Roth IRA, the cap is the same. It's $6,000 if I'm below the age of 50, and $7,000, so I get an extra $1,000 if I'm over the age of 50. Right? It's called a catch-up contribution. I have until tax filing deadline to make those contributions for the previous year. So perfect example, today would have been tax filing deadline. Today would have been my last chance to put a $6,000 or $7,000 contribution to my traditional or Roth IRA for the year of 2020. However, it falls on what our tax filing deadline date is. And as you may know or may be aware of, tax filing deadline this year did get extended. It got extended to May 17th, if I'm exact. If you're a Texas resident, I'm here in Houston, then it actually gets even further extended to June 15th, if I'm correct. So check when your tax filing deadline is. It should be either May 17th or sometime in June if you're in Texas. And that is your deadline now to contribute for these plans for last year. You have the entire year and next tax filing deadline to contribute for 2021. So keep that in mind. If you're looking to maximize contributions, you're looking to take advantage of that. If you have an account already, whether it be with Quest or with someone else, just know that your deadline is coming up. It's about a month from now. If you need more information on these accounts, definitely check out the Roth conversion class. It'll go over them again, but it also goes into a little bit more of a detail on how you can actually transition between a traditional to a Roth IRA. If you're an individual that has a traditional IRA account and you want to move it to a Roth IRA because you want to reap the benefits of tax-free distributions, you can actually do what's called a Roth conversion. Now, this comes with things like taxes, but sometimes it outweighs the tax liability, maybe less than what you're going to make. So maybe something to consider. So just take a look at the Roth conversion class, learn how to supercharge your tax-free wealth. That's going to be on our website. You go on to questtrust.com, you check on webinars, and review one of those there. So the next one I have is employer plans, the next group of accounts. Now, these employer plans are fantastic and advantageous for those who have self-employment income and don't necessarily have that corporate job that's providing them with a 401k, or don't have that job that's providing them with any kind of retirement plan, or don't have one in general and they want to get started. What's nice about these is typically they have larger contribution limits. Like the traditional Roth where it's capped at $6,000 and $7,000, this one you have a lot more to work with. So that's nice. For example, if I use a SEP IRA, what that probably means is I'm a self-employed person who maybe just works for myself. I can be cutting hair, I can be an entrepreneur and just running a very small business. I can be a real estate agent. Basically, I work for myself. I can create what's called a SEP IRA plan, which allows me to put a certain percentage of my annual earned income. Now, depending on how you file, whether I be a Schedule C earner or a W-2 earner, there's a percentage. But the maximum that I can actually put in would be $58,000 a year. That's a whole lot of money. And you have to qualify there. So for example, I make $100,000 of my W-2 income that I pay myself. Up to 25% of that would be my maximum contribution to a SEP plan, still giving me $25,000 to put in. It's either that 25% or the $58,000, whichever is less, right? So just to give you an example, a simple IRA account is useful for individuals who have their own company and business, but also have a few employees, less than 100 to be exact. but want to give them some sort of, I call it a mini 401k plan. What happens is there's a matching portion to incentivize the employees to put money in, and there's an amount that the employees can put in. Employees can put up to $13,500, maybe an additional $3,000 if they're over the age of 50, and then the employer can decide to do a 2% non-elective or 3% matching, right? So there's other ways that you can get this money in. And again, this can be completely self-directed as well. You don't have to stick to the normal traditional routes. And then lastly, we have a solo 401k plan. This one is very, very sought out. I get a few calls every single day about this plan. But what's different about that plan over the other ones is it has more specific requirements. You have to be self-employed. That company or your self-employment has to be generating profit and paying you some sort of income. And then you also cannot have any full-time employees. All right. So if you're an individual who does not have any employees but pays yourself out of your corporation, then you may qualify. Right. If you're a sole proprietor that doesn't have any employees or maybe just contracts out, then you may qualify. The benefit of this plan is a whole lot of different things. And we actually have a class strictly on the solo 401k. To give you kind of and tease you a little bit about what it is checkbook control, large contributions, it far exceeds steps and simples, right? Exemption to a tax called UDFI, or as it relates to UBIT. And then also the fact that you control that account completely and you become the trustee of the plan, I think it's very, very powerful. If you guys have questions about that, I highly suggest just watching our solo 401k class. I suggest watching the Maximizing Your Self-Employment Income class as well to get more of an idea of how that works, or giving us a call, because there's a whole lot that I can talk about an hour on the solo 401k plan itself. So to move along, the specialty plans. So the specialty plans are two plans that you can actually use today, and the only plans that you can really use today, potentially without penalty and taxes. My favorite is the health savings account. I personally have one myself. A health savings account is an account that I can put money into. I can take a tax deduction on the amount that I put in, and then I can take the money out tax-free as long as it's for qualified medical expenses, right? So again, it's a best of both worlds type of situation. I put money in, I get a tax deduction. I take money out, I take it out tax-free. No other account does that for you. Now, this account does get capped. If you have any dependents, your limit on the contribution would be fairly high. For 2021, it's $7,200. If you're over the age of 55, you get an extra $1,000. If you're single, don't have any dependents, it's just half of that, right? $3,600. So you do get a good amount of money that you can put into this plan a year and then turn around and use it for qualified medical expenses. We have a class on ESAs and HSAs specifically. Highly suggest watching that class on the HSA. I think it's a very, very good account. If you qualify to have it, meaning you have a high deductible health plan, it's something to consider. It is not like an FSA plan where it's a use it or lose it type of situation. It continues to roll over every single year as well. Now, the Covered Out Education Savings Account, fairly similar to where it's specialized on education. What happens is you can create this account for a minor, someone under the age of 18, and you can invest it for them and you can grow that account. And as you're growing it, if you need money, if you can take out some money for that child's education expenses, it can come out tax-free. Now, the contribution to this is going to be $2,000 a year per child. But you can contribute from the time that they basically are born and have a social security number to the time that they turn 18. And then every year you can invest it for them and grow that account and use it to pay for things like books, tuition, uniform, laptops, supplies, Wi-Fi, right? Arguably, you need to pay a Wi-Fi bill, right? To do your homework. So you can use the Covered Out Education Savings Account for that. So that's a very unique plan as well. Very common for those individuals who have children or grandchildren that were just born or very young and want to kind of have a different nest egg for their education. So if you're interested in that as well, reach out, watch our education class, the HSAs and ESA class online, or ask Nicole Baker. We're happy to give you guys a call about these plans as well and how we can use that. Now, as I mentioned, every single account that we hold can be self-directed. Not only can they all be self-directed and invest into private assets that we'll be discussing here in a bit, but they can also be used together and partnered together. We commonly see this with Roth and HSAs and ESAs because they're all usually different amounts, right? Usually maybe a Roth and a traditional IRA, maybe someone's larger account with most of the capital. An ESA has some capital in there and they just save them a little bit more. But you can use them all together for one single investment and one single deal to make up a total amount. This is an example of how it would read on someone's investments, agreements, and contracts and such if they were using one IRA where it says individual vesting, or if they're using more than one where it says partner vesting. So as you can see, each IRA's name is going to read Quest Trust Company, FBO, in this case, John Smith, Roth, IRA, whatever type it is, and then the account number. But when there's another one tied to that same investment, there has to be an undivided interest between those two accounts. And then it would also specify what that interest would be, probably based off of how much capital they put forward. So that's key, and I'll actually show you how that's going to be used in my 2 case studies today. Now, one thing we have to go over, and of course the IRS has to poop on our parade, is what restrictions we have in IRA accounts, what we cannot do. And this is going to be something that if you want to take anything out of this class, this is one of the things you want to take out from it. Because if you can know what you can and cannot do in an IRA, you know what deals you can go ahead and find, and you can get that money working as soon as possible. So there are 3 types of restrictions: people, transactions, and investment restrictions. So let's walk through this one by one here. People restrictions, or considered disqualified persons, are individuals who cannot benefit personally from your IRA account, indirectly or directly, right? Now, to give you an example, the IRS says the first person is yourself. You cannot benefit directly or indirectly from your IRA account, because the only way they want you to do that is when you take money out and you get taxed, right? So here we have a situation where you and Mr. IRA, your IRA account, are on 2 different sides of the fence. That little line there considered a fence. And you guys want to make a transaction to each other to benefit each other. Unfortunately, you cannot, right? Because again, you can't take advantage of those funds unless you take a distribution and then pay the IRS taxes. That's the deal, right? So you cannot be on different sides of the fence. But not only can it not just be you and Mr. IRA, but Mr. IRA is also disqualified from doing it with a few different people. This is a chart that kind of helps you define who that is. Now, I don't want you to you can take a picture of this chart, but I don't want you to get too bogged down on the details of this chart, because I can kind of sum it up for you very easily. And if there's anything you do, write this down. So as we mentioned, the first person is yourself, right? I'll go back here so you don't get too distracted with this big chart. The first person is yourself. And then it's going to be your spouse. Then it goes up and down that family tree. So it's going to be your children and your children's spouses, your parents and your grandparents, which keeps going up, right? As well as any companies that those individuals may own, may control, may be highly compensated by, or manage, right? So again, that's kind of what this chart says right here. These individuals are listed as fiduciaries to your account and have some sort of stake. The IRS automatically disqualifies those individuals and their entities, because if you were to pass away, the IRA most likely moves on to those individuals listed there. Now, I didn't mention everybody in your family. That's just really your immediate family, right? Brothers and sisters are not listed on here, right? Uncles and aunts are not listed on here. So you can still use that close circle you may have for deals and such, and you kind of do transactions with each other. But these individuals, no, you cannot. Now, I don't want you to confuse doing a transaction with someone being on different sides of the fence as to being on the same side of the fence, right? So in this scenario, in this picture right here, you can't do a deal between you and Mr. IRA, but move Mr. IRA to the left side of this fence and you'd be fine. If you partner up with your IRA partners up with your son's IRA or your wife's IRA, that's okay. Although they can't do transactions together, they can be parallel and be on the same side of the fence. So I hope that makes sense. Again, if you need also clarification, that's what we're here for. But if you take anything away, just remember those people, and that'll help you a lot, right? The restrictions is really buying, selling, trading, loaning, or extending a service. Buy, sell, trade, loan, very obvious what that means. You should not do those with those individuals or companies and businesses. Extending a service is kind of that gotcha card that the IRS has, and it's a really gray area. An extension of service can mean a few different things. But to give an example, an extension of service could be deemed changing the light bulb in a house that the IRA may own. You would be extending your services to the IRA, and the IRA didn't have to go out and pay a third party to do that. Now, of course, that's a very, I would say PG example. It's very easy. The light bulb is a quick little switch. But take it to a bigger example. What if, your IRA owned a property, but it needed a huge fix, and you owned a contracting business? You cannot hire a contracting business or have your contracting business use, extra supplies they have to go ahead in the house and make the repairs. That'd be a big no-no and a big penalty if you were to get caught. So you don't want to do that. You don't want to extend services direct or indirectly. If you have kind of some questions on whether or not you're on that gray area, then you most likely don't want to go with it. If it's gray, you kind of want to stay with it. You don't want to mess with your IRA and risk it blowing up and being distributed to you at face value. That's ultimately the penalty for a prohibited transaction. Then the last thing, super easy, investment restrictions. One is life insurance contracts, right? And the second one is collectibles. Now, collectibles are artwork, right? Rugs, gems, alcoholic beverages, and like collections of them. The reason why is because I think art is an easy one to describe. Artwork, you don't really have a real value to it. It basically is whatever the person thinks the value of that art is. The IRS needs values, needs hard values, because they need to know how to tax you. So if you buy a piece of art in an IRA account, it may be worth $1 million to someone. They'll be willing to pay it. But what if you wanted to take that out? You would probably argue that, hey, this is just worth $25, right? Or me, who maybe doesn't even like the painting, might argue that's worth $25. But you who love the painting may argue it's $1 million, right? So it's just something that's a collectible. We can't get a hard value on it. The IRS does not want you investing into those kinds of things. But it's very easy. That's all the things you cannot do. Everything else you can, right? So what can you invest in, and what kind of things do we deal with on a day-to-day basis here at Quest? Because remember, you can invest in the stock market, you can invest in the mutual fund. We know that. We're talking about what a self-directed IRA can do. Well, these are just a few examples of things that we see and what your investment choices may be. So here at Quest, we actually have 3 different departments that deal with these kinds of situations: real estate, private entities, and promissory notes. And these are probably the most common ones that we see investment-wise. This is not the entire list of things you can do. Our clients are very, very creative at times. But to give an example, real estate, we're dealing with single-family homes, unimproved land, tax liens, options. Private entities, the most common ones are these 4 right here: limited liability companies, limited partnerships, joint ventures, trusts, right? Ultimately, those limited liability corporations or partnerships, they may be doing a multitude of things, but an investment to those companies will be considered the same. Promissory notes, this is where you become that private lender and are loaning to someone else, and you can be very flexible and you negotiate the terms, and you can decide to do a secured loan or an unsecured loan, or you can do a convertible note or a shared appreciation note, net profit note. There's so many different kinds of notes you can do. And that's the cool thing, is that you're one in the driver's seat. You're deciding what route you want to go. Quest is not going to tell you which one's going to be better. Quest is not going to tell you, hey, are you sure you want to do that unsecured note? Maybe you should do a secured note, or vice versa. You decide, right? So definitely do your homework on maybe which is the best one, protect yourself, etc. Remember, this is your money that you worked hard for. But again, these are things, examples that you can do. I personally invest into notes, right? That's what I've done before. Before we get into the case studies, how does one get essentially started here at Quest? Well, one, of course, you need an IRA account, right? You need to open an account self-directed. So what an IRA specialist in my position kind of does on that phone call with you is we'll determine what kind of accounts you have. What is your goal? What do you plan to do? What kind of tax incentives are you looking for? Are you looking for deductions? Are you looking for tax-free growth? How you can make that possible with what you have going on? And we'll locate the right account for you and determine which one you need, and then explain the next step, which is funding your account. Individuals fund in 3 different ways. One being contributions, and that's when I put the money in or you put the money in personally through your checking account or savings account or wherever. You transfer from another IRA account. If you have an IRA at Fidelity, you can move that account over to an IRA here at Quest. If you have an IRA at Merrill Lynch, same thing. Or you roll over a old employer plan to an IRA account. That's a third way. Right, so there's different ways to do it. We'll walk you through that process. We'll work with the other custodian. We'll make sure that money gets moved over properly to avoid taxes to avoid any penalties, to do it as smoothly and quickly as possible. Number 3, locate your investment. As a self-directed IRA, you are the one locating the investment opportunity. You're the one deciding what it is that you want to do. We don't have a list of investments for you. We have the webinars, like the happy hour webinars, to help you kind of engage and find people to do deals with, but we won't tell you what to do. So you locate your investment, do your due diligence, and let us know, hey, this is what I'd like to move forward with. I'd like to use my capital to buy this home, to buy this note, whatever it may be. Once you tell us what it is you're looking to do, we have some forms, right? We have forms to keep track of the investment, to make sure everything is done properly, to ensure that the IRA is being properly represented. We're not looking to see that it's a good or bad deal, or if you can get a better return, or it's going to go sideways. Our opinion does not matter. You're in the driver's seat. So we're here to let you know that we're looking over your shoulder, making sure the IRA is properly taking title to the real estate, is properly mentioned on the note as the lender, right? Signing on behalf of your IRA with your approval, right? We're there to help you out and assist you in that process from A to Z. And then 5, of course, we fund it. All right, once you give us the information and where the money's going, we will fund that investment for you. From the time that you have your money in your account at Quest and the time that you completed those investment forms in step 4 to 5 takes no more than 24 to 48 hours, right? And what takes the longest is going to be probably step 2 and 3, moving money over from another custodian, because now we're working with a different company and whatever their processing times are. And then obviously locating your investment. You may have one already in the pipeline. You may find one in a month or so later on, just depending on how your deal flow is. That's going to be the longest, but once step 4 and 5, that's 24 to 48 hour turnaround time. We're very, very quick. Step 1, again, more like a 24-hour turnaround, step 1, but we do have 24 to 48 hours to get that account open. So if you have any questions on that, again, ask us, give us a call, ask Nicole Bako. She can definitely assist. So what I'm about to talk about right now is a real estate case study. This is an example of 2 individuals who purchased a real estate asset. And I'm actually going to use this opportunity to kind of go step by step. The second case study won't be as step by step, but just so you guys know, this is so you know how it worked out from point A to point Z working with Quest. So this is going to be a rental property. We have John Wood and Jay Wright, right? These are fictitious names, but this is a real case study. And they want to purchase an office condo for $250,000 within their SEP IRA plans. Now, don't get too caught up in the SEP plan. That's just what they had. But again, this could have been a Roth IRA. This could have been an HSA. This could have been an IRA. Any of them could do this deal. But they decided to use their SEP IRA plans. That's what their money is. They're probably self-employed individuals. They each transferred $150,000 from their current SEP brokerage accounts over to a SEP account at Quest. Now, they moved over a little bit more than needed just in case, right? I always want to be a little bit safe, because if anything comes up in the future, then that has to be paid out of the IRA. So they moved over more funds than they needed for the time being. They made an offer. That offer is going to read that partnered vesting, Quest Trust Company, John Wood, his IRA account number, Quest Trust Company, Jay Wright, his IRA account number, right? And they also want to complete a direction of investment for real estate. So at this point in time, they've already gone through steps 1, 2, and 3. Opened the account, they funded the account, and located the investment. Now what they're doing is those investment forms. That direction of investment basically tells Quest and our real estate team what it is you're looking to purchase, how much you're looking to invest, what IRA you're looking to use. Maybe you have multiple. And kind of what's your time frame, what's the amount being used, details for us to know and that we should be aware of so that we can work with you properly. What we'll do is we'll sign the contract, right, that you have provided us. Now you signed, read, and approved on it, meaning you've read the contract, you approve everything that's happening. And so we're just signing on behalf of your IRA and also making sure the IRA is properly represented. And we're sending it to the title company. In this situation, we also sent out the earnest money deposit. It's total $10,000, but because this is an even 50-50 split type of deal, it's $5,000 from each set plan. Right. Again, every expense moving forward, any money coming in and out is going to be split 50-50. At closing, they review documents. They send it back to us for signatures. We're good to go. Quest signs closing documents, and we fund title company for closing. So now the deed is recorded, and it's going to read this. It's Quest Trust Company, FBO, John Wood, IRA, 1, 2, 3, 4, 5. And again, as I mentioned, as to an undivided 50% interest. This could have been 30%. This could be 75%. But in this case, they win 50-50. So this can change. And then, of course, the second person is listed as well. So moving forward, now you have it in the IRA account. Now you got to do something with it and make profit, make revenue. So what they decided to do is they decided to do and hire a property management company to oversee the unit. They find the tenants for them. They handle those rents and expenses, right? Before I get into what they start making, though, I want to be clear here that you don't necessarily need a property management company, but what you do need to do and make sure of is that rents and expenses are being taken care of by the IRA, and rents going back to the IRA account. Now, if rents may be going to the property management company, they're taking their cut and then sending the rest to the IRA account, that's okay. But what should not happen is this money should never touch John and Jay's hands. It should never go to them to then go to the IRA account. It's always going to somehow fall into the IRA account without touching them. All right, so I want to make that very clear. In this scenario, they had a cash flow of $850 a month. So 50-50, right? Half of that goes to John's account, half of it goes to Jay's account. And everything, as I mentioned, because the SEP IRA account is being tax deferred, right? So they're not paying taxes on this personally. They're growing the account regularly. They'll pay taxes way down the line when they want to take the money out of the SEP. It's all tax deferred gains. So we have a client portal here. That's what number 5 here is talking about. Our client portal ultimately will show you those transactions happening. When that money goes into each account, so in this case, $425 to each SEP IRA account, you'll be notified via email and you'll be able to see it on your client portal. Right? So you can see if everything's moving in constantly. It is up to you to make sure that the money's coming in, right? Quest, if there's a missed payment, we won't reach out to the company. We're not tracking that. But if you see that, you know that you're supposed to get it on the first of the month and you don't get a payment, it'd be up to you to kind of see what's going on there, right? That's okay to do. So in this specific deal, just to kind of finish it off and close it here, the tenant of the building offered to buy the property. They offered to buy it for $395,000. So John and Jay were like, that's perfect. You know what? We'll take our money back and we'll go ahead and do another deal maybe in the future. So they start a sales contract for $395,000. Essentially, this is kind of the breakdown of the realized return. So the initial investment per account was $125,000. They had it for 26 months. So you multiply that by the cash flow that's going in a month, $425,000. They made $11,000 there in over 26 months. Gains from the sale, though, is where they made their big bucks, and that was $62,500. Now, so $198,550 went back to the IRA accounts within that 26-month time frame. That is a total of, basically 59% over 26 months. Tax deferred gain of $73,550 over just 26 months by doing this real estate deal and by leveraging their network. John leveraged Jay, Jay leveraged John, right? Maybe they didn't have the full amount. Maybe they want to do it together to be a little safer and not use all their capital. So you can leverage other people. If you had the money yourself, you could do this yourself as well. And all of it would have gone back to you. So this is an example of tax deferred gains and how that deal plays out. So key things to remember before we wrap this one up and go to our second case study is John and Jay don't pay taxes. It's tax deferred gains, but they will pay taxes eventually when they take the money out personally. If the accounts were Roth IRAs, or Roth 401ks, or covered up ESAs or HSAs, accounts that grow tax-free, all those gains would have been tax-free, even later on down the line. They were in total control. They told Quest what they wanted to invest into. They kind of were the people in the driver's seat. We're over here just making sure they're making the right left turn, the right turn, right? We're over the passenger seat going along with them. And they didn't take the money out of their IRA to buy the property. It went directly from IRA, title company, IRA bought the property. This is an example of IRAs can partner with people. And it's could have also been John, IRA, and Jay Wright person, or vice versa. It doesn't have to be just IRAs partnering together. You can partner with people and entities. That's okay too. Everything got split 50-50 in this case. And they had the checks deposited, as I mentioned, right back to the IRA account. We have a class that goes over kind of some sticky situations. In this situation, everything kind of went fairly smoothly. But of course, with real estate, you never know what can happen. And if there's some sticky situations, how do you deal with them? How do you solve them in an IRA account? We have a class on that buying real estate and IRAs and how to solve them. Just check it out online. So my promissory note case is actually one that I did myself personally, my first one that I did. And it also shows you two things. One, how simple a note deal may be, and two, that any amount of capital can make a deal, but you may need to leverage people. So what I'm looking at here is a note for a first lien position that they needed $157,000, right? I didn't have that in my IRA account. I had $6,000, right? I just made a contribution. This was a few years ago. And so I only had $6,000 in my IRA account, but there were 9, or I guess 8 in this case, different IRA accounts that I was able to involve in this deal to make up the $157,000. So just how we saw the partner investing before, there was 10 different people. This was 9 different people. So it was fairly long, but it's doable. And I'll show you what that looks like. This is the property, nothing crazy. Essentially, we're loaning to an investor that we knew, a friend. We knew he's a very respected investor out there. He's constantly doing deals, constantly borrowing from IRA accounts, has not had a bad word said about it, has not never paid his borrowers back. So I felt fairly comfortable. And not only that, he was securing this loan with the property, right? That's a way to secure your money, meaning if he didn't pay us back, we get to foreclose on the property. Right? So in one way, shape, or form, I would get my money back if I needed to. Now, I redacted some information here, but ultimately that big paragraph is essentially all the lenders on there. What it's listing is just Quest Trust Company, FBO, person's name, IRA, 1, 2, 3, 4, 5, as to an undivided interest of, etc. And listen to the next person and the next person. It was so many IRAs that even ESAs were involved, very small ESA accounts that were giving $3,000 and only 1.9% of the deal. Now, they're still getting a piece of the pie. Those are little kids. They're probably like 2, 3-year-olds that their parents put them in on this deal to grow their ESA accounts. Right, so that's a good example of how you can use those smaller accounts and bigger accounts to put together on deals. This is what the big first page of the note looked like. Again, very long paragraph, but that was all the lenders that were all at Quest Trust Company, and all of them were IRA accounts. Right, the lender's mailing address in this case was Quest Trust Company. There was nothing different. So just to kind of reiterate, the first lien position, so we could foreclose, so we were fairly secure. We negotiated 12% interest with a 1-year maturity, meaning after a year, that note, either they had to pay it back because it's expired, or we can extend the note if we needed to. But we knew the borrower. We knew him fairly well. So we knew that actually we were looking at probably getting paid back in about, we thought, 6 months. Now it actually ended up taking 8 months, but it was still well under the 1 year, and we're getting still 12% interest. Right, so you can do that in these notes. You can put minimums. You can say that it must last at least 3 months, but no more than a year. That's okay. That's part of your negotiation. That's why it's so nice that you can be very flexible with this. In total, we had a profit of $18,840. Now, the ESA has got 1.9% of that, right? My Roth IRA got somewhere around 3.8% of that, right? So there was a very small gain. It's not a home run, but doing multiple of these at a time are giving you returns that you're probably beating inflation for sure, and you're definitely probably beating the market as well, right? And that's the goal. Keep your money ahead of inflation and keep your money ahead of the market if you're doing these kinds of deals. So what's nice is, again, we negotiated terms, not Quest. All lenders had to submit internal Quest Trust paperwork. So that direction of investment for real estate we talked about earlier, there's one for notes too. Every single IRA had to have at least one, because we take into consideration every single IRA as its own and its own deal. Quest sent out one wire to the borrower. I know there's 9 different IRAs, but only one wire goes out to the borrower, and the borrower makes one payment to Quest on the total amount. Then here internally, we split it. So it's not a headache for anybody. We closed in a title company, and we also use the lender's attorney to draft up a promissory note. So that's another thing you can consider as well. You don't have to go that route. However, by using a lender's attorney, you are using someone that's looking out for your best interest and not the borrower's, making sure that the note has language in there that is protecting you and your money. If you're going to act like a bank, you got to start thinking like a bank, and you have to protect your money. Again, we said no matures in a year. Interest payments were paid back to Quest. And the biggest thing I think about this case study is all of the accounts were tax-free profits, were ESAs, HSAs, and Roth IRAs only. So all the money that was made is tax-free revenue. If an individual in the Roth IRA was reaching the age of 59 and a half, and they had it for 5 years, they would take that money out tax-free, no problem. Me, I'm not close to that age, but eventually I'd be able to take that out tax-free, no problem. ESAs, they can take it out immediately for education expenses, and HSAs immediately out for health expenses. So there's ways that you can maximize profit, maximize utilizing different accounts, and use that money to also even pay for day-to-day things like health expenses and education expenses. For individuals that don't necessarily have these IRA accounts, how can you profit today? How does this benefit you? Other people's IRA accounts. For individuals always looking for capital, you can look at hard money lenders, you can look at banks, you can also look at IRA lenders. There is over $300 million at any given moment in cash position at Quest within the IRA accounts we have here. That's just here at Quest, right? There's a lot of people out there that have money in maybe not cash position, but in the market, but they just have their best, what they think is the only thing they can do, that they can easily take out and move it to a self-directed IRA to be your next private lender. So as someone who's looking to borrow money, you want to take advantage of that, right? You want to take advantage and create your own private financing source. There's a lot of money, trillions of dollars, in fact, in retirement accounts. It's kind of the largest bucket of money for America's wealth, right? Some people can't touch it. A lot of people can. You just have to educate them on how they can do that. And at every gathering, there's millions of dollars available for investing. I'm willing to bet out of the viewers here, there's at least a few $1 million in IRA money, because the money's everywhere. You just know how to ask and how to acquire that, right? So as a borrower, take advantage of that for your next deals. If you're looking for money, come to the happy hours. Present your case. I guarantee you'll get a few different bites on individuals looking for more information because they want to get their money working. Little piece of advice. People who have money at Quest and sitting in cash don't make any money. It actually sits there like a rock. So they're itching to move that money. So as a borrower, take advantage of that. Of course, that person should do your due diligence on you, on the deal, etc. And you should also be kind of upfront with them. Tell them what to expect. Tell them what your deal is. And make sure that you also explain to them how, what happens if you can't pay it back. What in worst case scenarios, keep your private lenders happy because they'll come back. I actually have a private lending class on exactly on all those kind of tips. Highly suggest watching it as well. So guys, that kind of sums up a lot of the topics I have today for you on the 101 basics class of IRA accounts. I've teased a lot of different topics here and there. Definitely take advantage of the education that we have. As I mentioned, QuestCon Live is coming up. It's tomorrow, right, for 2 days. If you have not gotten a ticket yet, you still can, and you can even get 30% off. It is a paid event, but 30% off. Use Deshon 30 on our Eventbrite page. Nicole Baker will put that in the chat box. You can go ahead and get your ticket and be ready for tomorrow. There's also an option to get the recording. So if you can't make it, you don't want to be in front of a laptop for 2 days straight, watch the recording. Being live comes with its advantages. Speaking with people, asking questions live, it's always advantageous. But if you cannot stay in front of the computer, I completely understand. And you can get the recording as well. So use the Sean 30 for your 30% off and take advantage of that. Ask an IRA specialist. Give us a call anytime. We're always here. We're on the chat box as well. So there's different ways to get involved, in touch with us. One is that chat box. Go to questtrust.com. When you go on that chat box, it's not like any other website where it's a customer service agent that can answer general questions or a robot. It's actually someone there with you. I myself am on it at times. Nicole Baker is on it a lot of times. So we're there to help you answer those questions. And if it's something that we feel that may be a better conversation over the phone, we'll give you a call and we'll ask you to give you a call and schedule a time if necessary. So we'll help you right then and there as much as possible. So you know that you're getting quality information, getting a fast response from someone that's there trying to help you. Our phone number is 855-FUN-IRAs. So give us a call anytime you want. Our email address for the IRA specialists is iraspecialists@questtrust.com as well. Shoot us any email, shoot us any questions, inquiries, whether we can assist you with a multitude of things. This month, our offer is essentially when you open an account and when you're funding it, we know you're going to get a transaction there soon. So your first transaction is on us. It typically costs you $125 to make a purchase of an investment, but we're going to waive that for you as long as you just open your account this month and work to get it funded. What you want to do is you want to submit an application. You want to put Quest Deal. You can do that online, or if you speak to someone, an IRA specialist, if you use that email address, we'll send you the application. We'll schedule a call with you to get over the details, walk you through the paperwork, and get you going, right? I highly suggest always having a specialist in your tool belt. It helps you, especially for your first deal. It helps you for your onboarding. It can walk you through everything in the process. And that way you're not lost in a limbo and just doing things on your own online, although we have capabilities for that. My personal information is here as well. My name is Juan Deshon, juan.deshon@questtrust.com. Feel free to reach out to me at any point in time. Always happy to help. I respond fairly quickly. Sometimes I'm on the chat box as well. And if you see me at live events, feel free to say hi. So again, guys, this will be recorded. It is recorded and will be on Facebook as well. Just once we end here for replay. So if there's something I talked about, I went over fast and you wanted to watch again, go ahead and do that. Share on your pages, share on your walls, watch our YouTube videos. We have a bunch of education for you guys. So I want to say thank you for everyone joining. We hope to see you on our next classes. I believe our next one is going to be our QuestCon Live. There's no SDIRA Saturday this weekend because we're going to have QuestCon tomorrow and Saturday. So if you're a part of it, I'm excited. If you're not a part of it but thinking about it, definitely look at the Eventbrite page and join us tomorrow for our QuestCon Live. Thank you, guys. I will talk to you guys later. Thank you.